Good evening. I'm Epstein with your metal market update, and this update is for Wednesday, the 31st of May, 2023, time about 6:10 p.m. Central Time. So tomorrow, big day. Actually, tonight we'll see the vote on the debt ceiling. Tomorrow we get some key reports. You've got the ADP, private payrolls. You got Challenger Gray, corporate layoffs. And then Friday, you have the jobs report and probably the vote by the Senate on the debt bill. I am assuming that the debt ceiling bill will get through tonight in passage. If not, you're going to see some sharp negative reactions in these markets. But at the end of the day, has anybody sat down and really figured out what this is all worth in terms of the impact on GDP? Well, JP Morgan did, and if you get my full research, I'm going to review that tonight for people. And I think you'll be shocked as to what it all means. Remember that our Memorial Day sale ends today, the 31st. That'll be at midnight, 11:59 p.m. Central Time, and that's Central Time tonight. So if you want to take advantage, buy any of my research products, the subscription, the 1 year of them, and you do it, I'll show you in a minute how. You get to choose any of my courses. It's almost worth the same price as that, so you're really getting a nice deal here. If you move your cursor up to the top, you will see that there's an icon. Give it a click. That's how you do it. It's too late to call my staff. They're not working tonight, so you either do it that way or it's too late. If you're on my mailing list, I did mail everybody the invites, but I'm through with that too. So that comes to an end. So now, let's go back to these charts. Obviously, the big question is, what's this all worth? And as I said, I'll cover it in my research tonight. You are getting a little bit of a bid in the gold. You're seeing some of the currencies lifting up right now. You lost the embedded reading in the pound. That was easy to see today. Midday. I know I yanked any sell ideas that I had for my traders to get my full research. And you're getting some threats by the Bank of Japan that if the market keeps going down, they might do intervention. They are not talking about doing a change of policy. There might be an intervention, so that gives you a little bid there. Okay. If you take a look over here at the energy prices, all right. We're down to the point where jumping Joe Biden can go in and with his energy secretary, if they want to put out more tenders, why aren't they buying more oil? They can't tell me that they don't have the storage facility. They've sold off oil out of the SPR like mad. They wanted to buy it between $71 and $65 or $67. So they're in that zone. But here's what I'd prefer they do. Don't tell anybody. Put out your tenders in the industry, see what you get, buy it. Follow the Trump lead. I hate to say it. You don't tell the markets what you're going to do unless you want them to rally away from you. That's the smart thing to do. So when we come over to the gold market, it's done pretty much what I wanted it to. I was looking for a correction, possibly test the 18-day moving average right here. That's the 18-week. I take that back because it is a weekly chart of closes, and it challenged it, and it's held it so far. When we look at a daily bar chart, you've had a big slide in the market. You've gone from 2085 all the way down, as you can see here, to the 1931 level. So you broke pretty hard. Now is the market going to be able to find its legs is the big question. You're holding the 100-day moving average of closes, which tells me the resistance, if we can get this market going, is probably up at the 1988-20 zone, the 18-day average of closes. The market had gotten to the lower Bollinger Band, found its support all the way from actually right here to the 100-day. You slipped a little more, but you've come back, and that's so often the case in the market. And you lost the embedded reading, all right? But is that on a closing basis? So let's take a look at the market on the close today, and it is. So as of the close of the day, if you've taken my enhanced Bollinger Band course, which again you can get for free, you're supposed to be out of shorts if you were short, walking to the sideline. The potential is there that before you get under this low, the market should make a run to the 18-day average of closes. We'll see if that turns out to be the case. I'm going to have to get rid of June gold and go to the August gold now, and I just forgot to do that. When you look at silver, you've come up and you're challenging right now, what number? The 100-day average of closes. The trend is still down, but what happened here? Did you lose the embedded reading? The answer is no, you kept it. and you're losing it tonight by a lot. So the odds favor that this market on a break is going to see short covering. Traders will walk out of their short positions. That's what I'm expecting to happen. Obviously, I'm wrong if you re-embed, but to go from 36 to 21, you'd need a big break in the market and a slow stochastic. Once you lost in the copper market, the bearish embedded reading, I still think price and the 18-day average will come together, but copper is very weak. Why? Because instead of you getting the bounce, the big bounce that you normally do when you lose an embedded reading, if you've had a bearish one, it's at more or less marking time and letting the moving average fall to it rather than it racing up to it. That's not a bullish sign in any way. You know why that is. It's because China's economy is in shambles. That is the right word. It is slowed down. They never got that bump that they thought they would get when they opened up the door from COVID. And if you'll recall, they had their lunar holiday. They had all these other things going on. We all waited for the bump. It never came. And the canary in the mine, copper, was the leader of that. But now it's steel, it's rebar prices. Everything they're buying in materials is on the downside, including oil prices. When we look at the platinum, still coming down, but I'd look for some pretty big support in the first challenge of the gray line, the 200-day average of closes with the Bollinger Band, but it is bearish. Palladium finally hit the lower band first time. Bye-bye. That's what I'd be telling people that are short. You're oversold, not embedded yet. And in the dollar, a rough play tonight and tomorrow, which way you want to go into all these reports. That becomes the issue, all right? And it's a rough one. Are we trending? We are not. You have a higher high, lower low pattern, but you're embedded. This rules the day. When the red line closes under 79, that's the point at which I don't want to own dollars anymore until it re-embeds. So that would be the sign. You're not there yet, but the world's not open yet tonight. It got a little bit of time before that happens. So one more time, if you want to take advantage of the Labor Day sale, Memorial Day, I said it wrong, but Labor Day was in my mind because we used that ad copy. The Memorial Day sale, just move your cursor to the top here and away you go. I'll see you first thing in the morning. Take care.